Hello and welcome to the ASX 200 show. I'm Richard Baker and it's Sunday, October the 6th. Today I'm going to briefly start with what has happened to my positions, then the general market, then finally a bit of sector index analysis and what stocks I'm looking at moving forward. So the stocks from the last show, let's start with that. Now, BXB, it just never hit my start again at $13.16, and I'll just go to the 12 months here. And once again, I reiterate, as you can see, I'm just so glad that I used my stop because it just never, if I hadn't, look where I would be now, and it just never kind of reached that point again, and just fell away. Now, Westpac, WBC. So my start was set at 28.86. Now I got in at 28.89 on the 10th. I really thought this was going to go, especially as it broke that channel that I had talked about last time, that I previously mentioned. But unfortunately, Westpac, as with all my trades, I was basically taken out on the 2nd. Now, I did have my stop here, and I'll just go a bit closer. I had my stop set here at around the $29.19 mark, which was the bottom of this long green candle that was created on the 11th. However, when it gapped down, as you can see here on the 1st and the 2nd, and I have to say that gaps or gap downs always worry me. And with the way things were looking politically in the US, I just got out at the open and sold at somewhere around the 29.34. I'm not happy, but it is what it is. And at the end of the day, I still made money. Now, another stock that I mentioned, and I've got to say it has been awesome for me, was Lendlease. Now, I missed my preferred start, unfortunately, which was at the $15.18 level. And I got in on the 21st, which is here, at 15. So I got in basically as soon as I could at the open at $15.63. Now, unfortunately, and you just look, it just went straight away. Unfortunately, I was taken out on the 3rd here, on the 3rd of October, at 17.29. And I've got to say, I am disappointed. If you look here, and I talked about this in my previous video, I was disappointed because it had basically filled the gap, as I had hoped, and it had started consolidated. And I kind of felt that it moved from here and would then maybe potentially would test this 1850 level around here. But unfortunately, to say, we are in a unique, volatile market, and my stop was hit, so no questions asked. I just basically I got out as soon as my stop was hit on the 3rd. Now, another one that I talked about was TCL, which is Transurban. Now, my start simply wasn't hit. And as you can see, also if you look at the OBV now, it looks bad, it's broken down, and I've moved on. And I've completely removed this stock from my start list for the time being. So the next question is, what's happening on the market in general? And if we go through the ASX 20 stocks, and we can see that, generally speaking, there's nothing really here that I like at the moment. Look, some of the banks had a good run. We can see BHP, Brambles, as I just mentioned, Commonwealth Bank. They've now got some legal issues. CSL is, I've lost CSL, and I'll touch on it a bit later. But once again, it's a $230, $240 stock. It's just too expensive for me. Goodman, IAG, literally all the stocks in the ASX 20 right now, and say I just don't find anything of any interest. The one that I do like is Woolworths, and I'll just touch on that in a second. So you say I do like Woolworths. I think that one's very interesting, and I'll discuss that a bit later. So the market as a whole, I'm just going to go to the indices here, and please notice I always use my watch lists, and I would encourage you to do the same. The market as a whole had recovered from what effectively was called the Trump-induced pullback that we saw in early August. And in fact, if you look around here, the market was less than 70 points from challenging that high that was set in July in late September. And the problem that you'll find in a lot of markets is that at these levels, when it's very close to being all-time highs, is that they need something to propel them further, to propel them to go through these high levels. And if we then look at the international markets, so for instance the US charts, they are also very close in late September back to these levels that were set in July. And we can see that, then unfortunately new impeachment talk corroded market confidence, and then a series of poor economic data came through, which further eroded confidence. And this led to this 800-point drop over 2 days. And this effectively, when we're already at highs, effectively flowed over to our market. This is the All Ordinaries here. And, the market lost 250 points in 2 days. It was a bit of a bloodbath. However, the markets have a high level of anxiety surrounding the resolution of this China trade talks. And if you look regionally, you'll see that things like, in Hong Kong, with the trade talk issue plus their domestic factors, we are seeing a lot of money literally flood out of Hong Kong. And Hong Kong really is in a bit of trouble here. So now, moving on. What I want to talk about, I've touched on it in the past, is let's talk about sector and index charting. Now, I've previously talked about index or sector trading, and today I'm going to focus a bit more on that and how I use the software and watch lists to index trade. Now, this year we've had 3 really good sectors. The first would be the consumer discretionary. Now that's up around 23% this calendar year. And we've also had, which surprised me somewhat, the health sector, healthcare. So that is up 24%. And the big one so far this year has been the information technology. Now, to be the XIJ, to be brutally honest, I completely missed the XIJ run. Part of the reason is that if you look at the chart, most of it occurred from kind of this January to around this March period. And so most of it occurred in the first quarter of this year. And at that point of time, I had most of my money in the energy sector, which is the XEJ. I also had had a very good run in that period. I also had a lot of stocks in the resources, the financials, a few in the healthcare, and some in the consumer discretionary. And so, look, I just completely missed it on the whole infotech run. However, with healthcare, XHJ, this is a classic example of a top-down approach. Now, in the past, I've talked about CSL on many occasions, and I've got to say, I absolutely love this stock. I love the chart. It was coming up on virtually every scan, but I simply didn't have the resources to trade a $230 stock. I'm never going to trade it. But you think, hey, maybe there is another stock in the sector that I can trade. So what I would do is that I simply go to a website like the Australian Financial Review. I find the sector and I create a watch list, and then I just go through them. And so here is a classic example where I've created a watch list. And just 1 second. And here it is, the health sector. And so I've got every stock in this sector. And what I'll then do is I just simply go through and I just scroll through until I find a stock that I'm interested in. Now, the XHJ has, it's been up 2.3%, only on Friday. And whilst the index is hot, I may weekly scroll through them just to see which ones are the strongest. Now, having cycled through, there are two stocks that particularly catch my eye. And also remember, I've previously talked about SHL, Sonic Health, in the past few months. So the two stocks that I like is FPH, Fisher Paykel, and also the other one that I thought was of interest is PNV, which is Polynovo Limited. So to me, out of all the stocks at the moment that were in the health sector, PNV is the one that I can afford, and I think it is the most interesting. And so what I'll then do is, after finding the stock, I'll go down to a 3-month time scale, and if I look here, I think there's a bit of resistance here, and a good kind of point there to around the 226 mark, and so that I'll make that my my start, and I'll create a start there. Then with my stop, so I'll just have a look. I'll see where it's going to previously bounced and previously been to, and you can see here that it's had a few points of resistance and a few points of support at this level. And so for me, I just think I want to see if it would hold that level. So I'm just going to go just a tad below that, and so I will create my stop at 206. And so I'm happy to have a start, as I say, at 226. And as long as it stays within this channel, I'm happy to hold the stock, and I'll have my stop at the 206, 207. Now, another index that I did recently and created a watch list for was the consumer discretionary, or the XDJ. And so here you can see this here. So there are so many stocks in this sector that I really like, and that look very interesting. But 3 of them I particularly like. So, as I say, you find the index that is looking particularly good. You then create a watch list, and you can then scroll through those stocks. Now, the 3 that particularly pick out to me, the first one is Domino's. I also like JB Hi-Fi, which is JHX. And I think SGR also is showing some interesting signs here. So now a lot of these companies that you look in the consumer discretionary, they are first in line to benefit from the tax cuts, and they are also companies that have structurally led their industries better with the digital transition than others. For instance, a classic example would be JB Hi-Fi, as opposed to now, the defunct Dick Smiths. But the stock that out of the 3 that I particularly liked was Domino's Pizza. Just pull that up. Now, if we look at the 5-year chart here, we can see that it had a peak of around $80 back in August 2016, and it then actually had a full 50% retracement to these levels, in March 2018. And the reason why I like doing 5-year charts, and for that matter, often I'll do weekly charts for 10 years, is it gives you an idea of where is the stock now in relation to the past. Where has it been? Where is it? Where is it going? So I like to use often use 5-year charts. Now then, moving to a 12-month chart here, and we can see that it's retested this $40 level quite a few times, and in fact it broke down through that level, but then we had a strong annual report that came out, and it is broken back above this $40 level. Now this move has also been supported, if you look at the same time, by a strong OBV. But also, have a look at this, which what really has caught my eye. So you see, when I talk about those other days when I got completely taken out of virtually all my positions. So on October the 2nd and October the 3rd, when the market had a 250 point drop, I mean, absolute belting, the stock didn't even blink. And you know what that tells me? It tells me that people didn't want to get out. It tells me that all these buyers from the middle, from the 6th of August, people that got in at $37.50, in some cases, up 20%, that they're happy to sit, they're happy to hold. And so the big question here is, on this October the 2nd, October the 3rd, is where are the big sellers? And there simply isn't any. And so, so that gives me a lot of confidence with this stock. So once again, I'm going to go back to the 12 months. And this is often where you say you'll use these 12-month lines. So I'll create a trend line to guide me once again for my entry and exit points. And also, I want to say that the other big thing here is you look back in February. Here it is, in February here. You'll see that the stock broke down, and this is very interesting to me that it gapped down. And so, to me, now that it's broken back above this gap down level, that is now very, I'd be very worried about it breaking back down through that. So I would use that as basically as a stop for me. So now that I've set these two 12-month lines, I'll often then go back to the 3 months. And so funny enough, I'm pretty happy actually, with these two 12-month support and resistance lines. I'm pretty happy for them to become my entrance and exit points, my stops and starts. So I'm just going to do a bit of fine tuning using the 3-month scale. So I'm going to use this big candle on the 16th, and I'm basically going to I'm going to set my just at the top of that. So I'm going to set my start at 48.07. Just 1 second. So that's my start there. And look at this. So this is the 12-month line. This is the 3-month line. So I'm going to set my start now at the 48.7. Now, due to the nature of this stock, not being a miner or a technology stock, being more of a garlic bread and butter type stock, I'm going to use a fairly wide stop. And so I'm happy to use that breakdown level from back in February. If we go back to the 12-month scale, you see this level here. So I'm happy to use that breakdown level as a guide. And funny enough, I'm actually quite comfortable with 45.60. Just 1 second. Yeah, 45.56. Yeah, I'm happy to use my stop to be 45.60 as my stop for this stock. Now look, once again, I want to stress the important factor with stops. It's not necessarily where you put it. There is no such thing as a right or a wrong stop. But the fact that you develop the habit of creating and applying the stops is the most fundamental, important aspect of stops. So there you have it. That is a trade that I've created from the consumer discretionary sector, purely by looking at what sectors are moving strongly. So now I'm just going to move on to my general scans. So the first one I'm going to do is my Dava scan. And look, I'm going to do this in real time. And once again, I stress, I generally only use watch lists. So I don't use filters at all. I don't scan the whole market. Now, so what have I come here? So I've basically come up with 15 scans. I'm just going to go back up to 15 stocks. And I just quickly scroll through them. And I've got to say, at this stage, nothing really grabs me. And once again, so there's CSL that I've talked about. Now, one thing I do want to do and touch here, and it's one of the great functions of this software. You'll see here on the right-hand corner, just below the code and the name, you've then got the sector. And so you can see here that a lot of these stocks in my scan today are the real estate sector. And for me right now, I just don't feel comfortable with the real estate sector. I think there's a lot of concerns, a lot of problems. And so I'm staying completely away. But that's a quick, so once again, it's a quick way to find stocks in your generic scans in sectors that you like. So let's just go back to one that has piqued my interest. So one of them is News Corp. The other stock that I have liked for my own scans, just hold on one second, is Woolworths. So I think Woolworths is interesting, and News Corp. So I'll write these down and come back to them later. So then the next scan that I always do is the Frank's pattern, which is in the Guru's toolbox. And I just click scan. Now with Frank's pattern today, only 5 stocks have come up. And once again, when you go through them, the only one that really interests me very strongly. Now I'll come back to Fisher and Paykel because it is in my healthcare sector, as you can see that I do like. But apart from Fisher and Paykel, the only other stock, it's real estate, I've got no interest, that really interests me is Fortescue Metals. So I'll write down and come back to that. Then I go back to the Guru's toolbox and I do the Sam Davis box scan. Now for Sam, I always do the inner box, and that is because I want to know what stocks meet that criteria now. So 19 stocks come up with the Sam scan. And most of them, I'm just not that interested. There you go, Old Faithful, CSL has come up again, and bingo, look at this. So the stock that I was just talking about, that I established or found through doing a index scan, has now come up again in the SAM scan. And that to me adds a lot of weight. The odds now of a successful trade have just increased because it's not only, it's in 2 scans. Isn't it? And look at this. Isn't this also interesting that I see, just one second, there's Fisher and Paykel again, but also JB Hi-Fi has come up. And also News Corp. So News has come up with, it's now come up in 2 different scans. And let's just finish the SAM scans and see what else comes up. And there's also Woolworths. So, there's 2 stocks that now have come up in 3 different scans. Now, moving on, I'll do my own indicators and events. Now, as I say, please take a screenshot if you like. These are the ones that I like. I always use Fibonacci numbers, 21, 34, or 55. And as I say, I always use my watch list. So I only come up with 5 stocks. And let's just go through them, see what there is. And there's nothing really that grabs me whatsoever. And so finally, I then do, and not every scan is going to come up with something that you find interesting. Finally, I do my pattern and events, which is slightly different now. Sometimes I used to with patterns, I like to use sources or ascending triangles. So I'll do a scan, and 8 stocks have come up for me today. And it's real estate, bingo, domain holdings, Luca, absolutely no chance I'm interested. So nothing really comes up that I'm particularly interested in. So what that then means is, if you look at the so far, there's only 3 stocks that I'm particularly interested in. Domino's, News Corp, Woolworths, Fortescue Mining, and PNV. So these are the 5 stocks that I'm going to focus on for the next few weeks. Now I've already discussed DMP, Domino's, and PNV. So let's move on and discuss the others now. So News Corp. So I've traded this stock for years, and in fact it was one of my favourite option stocks. Now looking at the chart, I'm just going to go, I think it was in the Davis box. Just hold on one second. It may not have been in my Davis scan. Sorry, I think it was in somebody's. Just one second. Oh, here we go. So looking into the Davis, I'm pretty comfortable with using the Davis box for my start. So I'm going to slide to the 3 months. So I will then set my start at 21.75. Now I stop using the stop loss box. I'm willing to give this a bit more room, and so I'll probably go back to the 12 months. I just want to see, considering the market that we're in and the environment, I'll probably just give it a bit more room than I normally would. And so I think I'll just hold on 1 second. I think I'll probably just set around the 21.31 price level, thereabouts. If we could hold these 2 points. So if it broke through 2031, I'd be a bit concerned. And so my stop will probably be there. It's in the middle of the red box. And once again, with the Davis system, you can set your starts and your stops however you wish. It simply is giving you a guide. And basically, it's the practice of using stops and applying stops that are so important. So moving on, FMG, which I believe was in the Frank scan. Now, Fortescue is totally iron ore price sensitive. And if you look at the 1 year iron ore price, you will see a synergy and almost an identical charting pattern. So with this in mind, I will have a very tight stop for Fortescue. And my attitude is I'm basically either right or wrong. There is no in between. And so once again, I'm going to go. I think it was the Frank scan that we saw Fortescue. Just hold on 1 second. There we are. So it's got here 923. Considering what's happened over the last few days, I'm probably going to. I don't think I'm going to wait for the Davis box. I think I'll be quite $9, 9 there. Yeah, look, I would be quite happy. You see this green candle that was on the 18th. I'd be quite comfortable if it kind of hits that level and holds to get in. But as I say, I am going to have a very tight stop with this. So I will set my start at 909, 908, 909 thereabouts, and I'll probably put my stop. Let me just have a look. See here, yeah, there. I definitely want it to hold this kind of mini channel here, and so I think what's that? $8, $8.87. Yeah, okay. So yeah, look, I'll have my start will be 908 and my stop will be $8.88. And as I say, I'm either right or I'm wrong. It's also important to, with Fortescue to remember that it is very US-China trade announcement sensitive. So if there is any positive, move from that area, you'll see this stock move up very aggressively. So lastly, let's look at Woolworths. Now, I think that was in the Davis scan. Hold on 1 second. So I'll just cycle through. Here we go, Woolworths. I'll go back to the 12 months. So using the starting scan, it's got 38.10. Being a retail and a consumer stock, which is very sensitive to retail sales and also the tax cuts that we received, I'm quite happy to have a bit of a fat kind of stop. And I'll basically probably lightly just use the Davis here. So I'm quite comfortable to set my start at the 38.10 mark. I just want to see where the box is here. Yeah, look, I'll probably give it a bit more room. And so I think I'll set a stop just below this level. And I'll probably set my stop at 35.85. And so that's the 5 stocks that I'll be looking at moving forward. That'll be Domino's, News Corp, Woolworths, Fortescue, and PNV. Now, finally, I'd like to talk about October as a whole. Hold on 1 second. Let me just pull up the market. Now, with the stock market, perception is reality. It doesn't matter if it's real or delusional. If the market believes it, it's real. And that's that. October is jinxed for many investors. And so to me, it means there are often some great buying opportunities in October. So look for stocks like we saw with DMP that are strong during the times of weakness or are strong or hold steady during any pullback. Because often they are the stocks that then rise strongly when the market starts heading up again. Now, please, on a final note, make sure you listen to Sam Berg's Breakout Wednesday every week right here on Protrader TV. And also, don't forget to listen to Frank's Friday broadcast, which is the fourth button. A lot of people ask about this. See this Friday broadcast? So that's out every Friday and it lasts for the whole week. So thank you, and till November, she'll see you again.